Okay, within the Code of Federal Regulations, I am reading the Truth in Lending Act. I am in Subpart C right now, talking about closed-end credit. 1026.18 discusses the content of disclosures as they were introduced to us in 1026.17, which may be referred to a bit here within this text. Moving on, for each transaction other than a mortgage transaction subject to 1026.19 E and F, the creditor shall disclose the following information as applicable. A. Creditor, the identity of the creditor making the disclosures. B. Amount financed, the amount financed using that term in a brief description such as the amount of credit provided to you or on your behalf. The amount of finance is calculated by 1, 2, and 3. 1, determining the principal loan amount or the cash price, subtracting any down payment. 2, adding any other amounts that are financed by the creditor and are not part of the finance charge. And 3, subtracting any prepaid finance charge. C, itemization of amount financed. Except as provided in paragraph C2 and C3 of this section, a separate written itemization of the amount financed, including the amount of any proceeds distributed directly to the consumer. Roman numeral 2, the amount credited to the consumer's account with the creditor. Roman numeral 3, any amounts paid to other persons by the creditor on the consumer's behalf. The creditor shall identify those persons. The following payees may be described using generic and other general items and need not be further identified. Public officials or government agencies, credit reporting agencies, appraisers, and insurance companies. Roman numeral 4, the prepaid finance charge. 2. The creditor need not comply with paragraph C1 of this section if the creditor provides a statement that the consumer has the right to receive a written itemization of the amount financed together with a space for the consumer to indicate whether it is desired and the consumer does not request it. C. Good faith estimates of settlement costs provided for transactions subject to RESPA may be substituted for the disclosure required by paragraph C1 of this section. Letter D. Finance charge. The finance charge using that term and a brief description such as the dollar amount the credit will cost you. 1. Mortgage loans. In a transaction secured by real property or a dwelling, the disclosed finance charge and other disclosures affected by the disclosed finance charge, including the amount financed and the annual percentage rate, shall be treated as accurate if the amount disclosed as the finance charge, Roman numeral 1, is understated by no more than $100 or 2 is greater than the amount required to be disclosed. 2. Other credit. In any other transaction, the amount disclosed as the finance charge shall be treated as accurate if in a transaction involving the amount financed over $1,000 or less, it is not more than $5 above or below the amount required to be disclosed, or in a transaction involving an amount financed of more than $1,000, it is not more than $10 above or below the amount required to be disclosed. Annual percentage rate. An annual percentage rate, using that term, and a brief description such as the cost of your credit as a yearly rate. Goodness. For any transaction involving a finance charge of $5 or less on an amount finance of $75 or less, or a finance charge of $7.50 or less on an amount finance of more than $75, the creditor need not disclose the APR. F. Variable rate. Except as provided in paragraph F3 of this section, if the annual percentage rate may increase after consummation in a transaction not secured by the consumer's principal dwelling or in a transaction secured by the consumer's principal dwelling with a term of 1 year or less, the following disclosures, Roman numeral 1 through 4. 1. The circumstances under which the rate may increase. 2. Any limitations on the increase. 3. The effect of an increase, and 4. An example of the payment terms that would result from the increase. 2. If the annual percentage rate may increase after consummation in a transaction secured by the consumer's principal dwelling with a term greater than 1 year. The following disclosures. Roman numeral 1 and 2. 1. The fact that the transaction contains a variable rate feature. 2. A statement that variable rate disclosures have been provided earlier. 3. Number 3. Information provided in accordance with 1026-18F2 and 1026-19B may be substituted for the disclosures required by paragraph F1 of this section. Letter G. Payment schedule. Other than for a transaction that is subject to paragraph S of this section, the number, amounts, and timing of payments should be scheduled to repay the obligation. Number 1 under G. Payment schedule. In a demand obligation with no alternate maturity date, the creditor may comply with this paragraph by disclosing the due dates or payment periods of any scheduled interest payments for the year. 2. In a transaction in which a series of payments varies because a finance charge is applied to the unpaid principal balance, the creditor may comply with this paragraph by disclosing the following information. Roman numeral 1 and 2. 1. The dollar amounts of the largest and smallest payments in the series. Roman numeral 2. A reference to the variations in the other payments in the series. Letter H. Total of payments. The total of payments using that term and a descriptive explanation such as the amount you will have paid when you have made all scheduled payments. In any transaction involving a single payment, the creditor need not disclose the total of payments. Letter I. Demand feature. If the obligation has a demand feature, the fact shall be disclosed. When the disclosures are based on an assumed maturity of 1 year as provided in 1026-17C5, that fact shall also be disclosed. J. Total sales price. If in a credit sale, the total sales price using that term and a descriptive explanation including the amount of any down payment, such as the total price of your credit or purchase on credit, including your down payment of dollar figure, the total sale price is the sum of the cash price, the items described in paragraph B2 of the finance and the finance charge disclosed under paragraph D of this section. K. Prepayment. 1. When an obligation includes a finance charge computed from time to time by application of a rate to the unpaid principal balance, a statement indicating whether or not a charge may be imposed for paying all or part of a loan's principal balance before the date on which the principal is due. Letter L. Late payment. Any dollar or percentage charge that may be imposed before maturity due to a late payment other than a deferral or extension charge. Letter M. Security interest. The fact that the creditor has or will acquire a security interest in the property purchased as part of the transaction or in other property identified by item or type. Letter N. Insurance and debt cancellation. The items required by 1026.4D in order to exclude certain insurance premiums and debt cancellation fees from the finance charge. Letter O. Certain security interest charges. The disclosure required by 1026.4E in order to exclude from the finance charge certain fees prescribed by law or certain premiums for insurance in lieu of perfecting a security interest. Letter P. Contract reference. A statement that the consumer should refer to the appropriate document for information about non-payment, default, the right to accelerate the maturity of the obligation, and prepayment rebates and penalties. At the creditor's option, the statement may also include a reference to the contract for further information about security interests and, in a residential mortgage transaction, about the creditor's policy regarding assumption of the obligation. Letter Q. Assumption policy. In a residential mortgage transaction, a statement whether or not a subsequent purchaser of the dwelling from the consumer may be permitted to assume the remaining obligation on its original terms. Letter R. Required deposit. If the creditor requires the consumer to maintain a deposit as a condition of the specific transaction, a statement that the APR does not reflect the effect of the required deposit. A required deposit need not include, for example, 1, 2, or 3, 1, an escrow account for items such as taxes, insurance, or repairs, 2, a deposit that earns not less than 5% per year, or 3, payments under a Morris plan. Letter S, interest rate and payment summary for mortgage transactions. For a closed-end transaction secured by real property or dwelling other than a transaction that is subject to 1026.19 E and F, the creditor shall disclose the following information about the interest rate and payments. 1 and 2. 1. Form of disclosures. The information in paragraphs S 2 through 4 of this section shall be in a form of a table with no more than 5 columns, with headings and format substantially similar to Model Clause H-4E, FG, 8, or H. In Appendix H to this part. The table shall contain only the information required in paragraphs S 2 through 4 of this section, shall be placed in a prominent location, and shall be in a minimum of 10-point font. So we're talking about the interest rate and payment summary for mortgage transactions right now. Based on the way this reads, I'm getting the feel that this is reflecting the new TRID requirements. That's the simplification of RESPA and TILA disclosures. So now that I've gone through the form of disclosures being like Appendix H in the form of a table with 5 columns, let me go into number 2, the interest rates. Roman numeral 1, amortizing loans. A, for a fixed rate mortgage, the interest rate at consummation. B, for an adjustable rate or step rate mortgage. 1, 2, and 3. 1, the interest rate at consummation in the period of time until the first interest rate adjustment may occur, labeled as the introductory rate and monthly payment. 2, the maximum interest rate that may apply during the first 5 years after the date on which the first regular periodic payment will be due, and the earliest date on which the rate may apply, labeled as maximum during the first 5 years. And 3, the maximum interest rate that may apply during the life of the loan, and the earliest date on which the rate may apply, labeled as maximum ever. C, if the loan provides for payment increases as described in paragraphs S31B of this section, the interest rate in effect at the time the first such payment increase is scheduled to occur, and the date on which the increase will occur, labeled as first adjustment, if the loan is an ARM or otherwise labeled as first increase. Negative amortization loans, Roman numeral 2. For negative amortization loans, I see A through C. A, the interest rate at consummation, and if it will adjust after consummation, the length of time until it will adjust, and the label introductory intro. B, the maximum interest rate that could apply when the consumer must begin making fully amortizing payments under the terms of the legal obligation. B, the maximum interest rate that could apply when the consumer must begin making fully amortizing payments under the terms of the legal obligation. I just read that. C, if the minimum required payment will increase before the consumer must begin making fully amortizing payments, the maximum interest rate that could apply at the time the first payment increase and the date the increase is scheduled to occur. And D, if a second increase in the minimum required payment may occur before the consumer must begin making fully amortizing payments, the maximum interest rate that could apply at the time of the second payment increase and the date the increase is scheduled to occur. Roman numeral 3, introductory rate disclosure for amortizing ARMs. For an amortizing ARM, if the largest rate at consummation is less than the fully indexed rate, placed in a box directly beneath the table required by paragraph S1 of this section in a format substantially similar to Model Clause H-4L in Appendix H to this part by A through C. A, the interest rate that applies at consummation and the time of a period of time for which it applies. B, a statement that even if market rates do not change, the interest rate will increase at the first adjustment, and a designation of the place in sequence of the month or year yet as applicable of such rate adjustment, and C, the fully indexed rate. Number 3 under section S about the payment table. Payments for amortizing loans. Roman numeral 1, principal and interest payments. If all periodic payments will be applied to accrued interest and principal for each interest rate disclosed under paragraph S2I of this section, you get A through D. A, the corresponding periodic principal and interest payment labeled as principal and interest. B, if the periodic payment may increase without regard to an increase rate adjustment, the payment that corresponds to the first such increase and the earliest date on which the increase could occur. C, if an escrow account will be established, an estimate of the amount of taxes and insurance, including any mortgage insurance or any functional equivalent payable with each periodic payment. And D, the sum of the amounts disclosed in paragraphs S3I, A, and C of the section, or S3I, B, and C of the section as applicable, labeled as total estimated monthly payment. Roman numeral 2, interest-only payments. If the loan is an interest-only loan for each interest rate disclosed under paragraph S2I of this section, the corresponding periodic payment, and A, if the payment will be applied to only accrued interest, the amount applied to interest labeled as interest payment, and a statement that none of the payment is being applied to principal. B, if the payment will be applied to accrued interest and principal, an itemization of the amount of the first such payment applied to accrued interest and to principal, labeled as interest payment and principal payment, respectively. C, the escrow information described in paragraph S3, Roman numeral 1, C of this section, and D, the sum of all amounts required to be disclosed under paragraphs S3, Roman numeral 2, A and C of this section, or S3, Roman numeral 2, B and C of this section as applicable, labeled as total estimated monthly payment. And lastly, 4, payments for negative AM loans. For negative amortization loans, Roman numeral 1, letter A, the minimum periodic payment required until the first payment increase or interest rate increase corresponding to the interest rate disclosed under paragraph S2, Roman numeral 2 of this section, Roman numeral 2A of this section. B, the minimum periodic payment that would be due at the first payment increase and the second, if any, corresponding to the interest rates described in paragraphs S2, Roman numeral 2, C, and D of a section. And I'm like completely missing the point because this reads so difficult. Let me say, B. Wait, frick. I am in 4, S4, which is relating to payments for negative AM loans. For negative AM loans, you know, I don't know, disclose these 3 things, for God's sake. Well, Roman numeral I, 3 things under Roman numeral I have to be disclosed. That's the minimum periodic payment required until the first payment increase or interest rate increase corresponding to the interest rate described somewhere else. B, the minimum periodic payment that would be due at the first payment increase and the second, if any, corresponding to the interest rates described in somewhere else. And C, a statement that the minimum payment pays only some interest and does not repay any principal and will cause the loan amount to increase. So that's the most important part right there. I mean, this is basically telling me how to fill out a table, literally box by box. But the most important part is that statement that the minimum payment pays only some interest and doesn't repay any principal or whatever at the bottom and will cause the loan amount to increase. That's probably got to go somewhere in the bottom of the table, if not under the table. So that's really all that matters. Filling out the table isn't going to be like rocket science. 2, the fully amortizing periodic payment amount at the earliest time when such a payment must be made corresponding to the interest rate disclosed under paragraph S2, Roman numeral 2B of this section. So basically, the date when the interest, whatever, the date when the payment changes. Roman numeral 3, if applicable, in addition to the payments in paragraphs S4(1) and 2 of the section, for each interest rate disclosed under paragraph S2, Roman numeral 2 of the section, the amount of the fully amortizing periodic payment labeled as the full payment option, and a statement that these payments pay all principal and all accrued interest. Where would you write that? Why don't you give me, okay, it would be HG, I see here, would be the model clause to I think, to label, or to follow here. But before we get there, number 5 discusses balloon payments, Roman numeral 1, except as provided under S5(2) of this section, if the transaction will require a balloon payment defined as a payment that is more than 2 times a regular periodic payment, the balloon payment shall be disclosed separately from other periodic payments disclosed in the table under this paragraph outside the table, and in a manner substantially similar to H4J in Appendix H to this part. 2. If the balloon payment is scheduled to occur at the same time as another payment required to be disclosed in the table pursuant to paragraph S3 or S4 of the section, then the balloon payment must be disclosed in the table. 6. Special disclosures for loans with negative AM. For a negative AM loan, the following information in close proximity to the table required in S1 of this section with headings, content, and format substantially similar to model clause H4G in Appendix H to this part. Roman numeral 1 and 2 before I get to go into definitions. 1. The maximum interest rate ensures period of time in which such interest rate could be reached, the amount of estimated taxes and insurance included in each payment disclosed, and the statement that the loan offers payment options, two of which are shown. And Roman numeral 2, the dollar amount of the increase of the loan's principal balance if the consumer makes only the minimum required payments for the maximum possible time and the earliest date in which the consumer must begin making fully amortizing payments, assuming the maximum interest rate is reached at the earliest possible time. Alright, now I'm at number 7, which is definitions. And so they define adjustable rate mortgage and step rate mortgage, fixed rate mortgage, and interest only. Amortizing loan, fully indexed rate, no guarantee to refinance statement is another disclosure required here. For closed-end transactions secured by real property or a dwelling other than a transaction that is subject to 1026(19) E and F, the creditor shall disclose a statement that there is no guarantee the consumer can refinance the transaction to lower the interest rate of periodic payments. And lastly, 2, format the statement required under T1 of the section must be in a form substantially similar to the model clause H4K and Appendix H to this part. Seeing as there's only six definitions here to describe, basically, to fully understand part S of the disclosure, I'm going to go into them. Roman numeral 1, the term R means a transaction secured by real property or dwelling for which the annual percentage rate may increase after consummation. Separate mortgage is when interest rate will change after consummation at the rates that will apply, and the periods for which they apply are known at consummation. 3, the fixed rate mortgage is not an adjustable rate or step rate mortgage. Interest only means that under the terms of the legal obligation, one or more of the periodic payments may be applied solely to accrued interest and not to loan principal. An interest-only loan is a loan that permits interest-only payments. 5, the amortizing loan means a loan in which payment of periodic payments does not result in an increase in the principal balance under the terms of the legal obligation. The term negative AM means payment of periodic payments that will result in an increase in the principal balance under the terms of the legal obligation. The term negative amortization loan means a loan other than a reverse mortgage subject to 1026.33 that provides for a minimum periodic payment that covers only a portion of the accrued interest resulting in negative AM. 6, the fully indexed rate means the interest rate calculated using an index value and margin at the time of consummation. That's it for 1026.18, I think. Let me just double check. Yes, 18. under closed end, credit, subpart C.